Welcome to Market Matters. I'm Charlotte Chong, joined by Chuang today. Company in the news, we have Seacera Group Bhd. They are involved in tile business and also in property as well. The share price actually closed 2.36% lower at 1.24 ringgit today. Now the news for the company today is they are planning to diversify into medical devices business, and they've signed this SSA with Proligen Sdn Bhd to set up the country's first polysulfone dialyser manufacturing plant in Malacca. And this subscription price is at 2.96 million ringgit.
Yeah, so this will give them effectively 51% controlling stake in the Proligen MD, and according to the group managing director, this plant in Malacca will produce 2 million pieces of dialysers annually and expected to generate a profit before tax of at least 75 million ringgit within 3 years from the production commencement date, which are big numbers when you consider the fact that this 51% actually just cost them less than 3 million ringgit. So that's interesting.
And also the most important thing is because locally we don't see a lot of people, we don't see any manufacturer actually produce this product, and it would not face any competition locally. And the company is diversifying its revenue base in this area, and it's because it's going to have less impact on its building material segment.
So hang on. So basically, this 500,000 shares will cost them 3 million ringgit, but the estimated investment value for the business shall be around about $51 million, which I guess explains why the share price didn't really react this morning, given the amount of money that's going to be sunk in before the returns can be felt.
They are going to spend more to invest first before they see returns. Now, before the suspension yesterday, before they actually announced this announcement, the company was qualified for construction works related to these two new highways, Dash and Silk highways. And for Dash, SPAS, which is a wholly owned subsidiary of the company, has been pre-qualified in 4 out of the 8 separate contract works packages, and SPAS also got this qualified work for Silk for 9 separate contract works packages.
Well, 1 out of the 9. Dash, of course, costs about 4 billion ringgit. It's going to be about a 20-kilometer 3-lane expressway that will traverse Shah Alam, Puncak Perdana, Kota Damansara, Mutiara Damansara, which is where the edge is, as well as Damansara Perdana.
Do you like the way they diversify into medical devices? Do you think they should actually focus more on the construction work for these 2 new highways?
I don't know. I mean, they've started in tiles, then they went to construction, then they went to property. They've also got this township concept project in Hulu Langat with a GDV of more than 10 billion ringgit. So maybe with that township, they're going to be doing some kind of health and wellness concept there with their medical devices.
I think it's positive for this company, to diversify. They have like 3 different business models in their portfolio, and once, say for example, property is slow, they could actually go into other business as well. They can actually focus more on the tile business or focus more on the medical device business.
Correct, which is itself highly competitive and highly intense on that front.
Now, for its third quarter ended FY15, net profit actually up 2,085.2% at 5.9 million ringgit, revenue down 17.8% at 14.8 million ringgit. To take it all home, the company is planning to diversify into medical device business, and it's planning to build the country's first polysulfone dialyser manufacturing plant in Malacca, and these Zulkarmin said it will produce 2 million pieces of dialyser per annum. Now let's move on to our last segment. Hua Yang Bhd is our broker's call today. It closed 1.07% up at 1 ringgit 89 cents today. Now, what's the news of this company? The company actually yesterday announced they are going to acquire this company called Grandview Realty Sdn Bhd for 75.6 million ringgit.
Yeah, it's going to cost them that money to buy 73 acres of freehold land. The main rationale is because this land is actually adjacent to Kota Masai, which is also in Johor and it's owned by Grandview Realty. The purchase consideration turns out to be about 24 ringgit per square foot, which in public investment's view is a little bit pricey, given the fact that I think one of the main objectives for this land will be affordable housing, which is what Hua Yang is famous for. Nonetheless, the public investment reckon it's still an outperformed call on Hua Yang with a target price of $2.20, which is around about 30 cents upside from the stock.
Now, TA Research actually had maintained a sell call with unchanged TP of 1.95, and as opposed to what Public Invest said, they deemed the acquisition price as attractive because when you compare with its current asking price of 35 to 60 ringgit per square feet in Johor, it's actually quite cheap. because they spend about 20 over ringgit to buy the piece of land in that area.
Correct, but public investments valuation metric is they say slightly on the higher side because they use this metric called the land cost to the GDV ratio of 22%, which is beyond theirs as well as their comfortable threshold of 20%. So basically what they're going to make from the land versus what they paid for the land, it's over their 20% threshold, which is not by a lot, 2 percentage points, but it's still over the 20% threshold.
Now, TA Research actually say they are neutral on this acquisition, although they think that the price is attractive because they believe that new land acquisition is widely expected after what happened last year. The group actually terminated 2 land deals, one in Selayang and another one in Bukit Mertajam, which has a GDV potential at 871 million ringgit.
Correct.
They terminated it last year.
Yeah, so in the property market, which is actually quite weak, you do not want to be paying over the market price for land while you're land banking as opposed to what they're doing now. So, obviously the jury is out in terms of Hua Yang's land banking exercise, but maybe they're paying a bit more over the odds because they really own land adjacent to it.
But I believe their business model is doable.
Affordable housing, medium cost housing.
Yeah, so I think as a whole, I think affordable housing will not go out of favor because a lot of people still will buy houses from all these.
Everybody needs shelter. Everybody.
Now let's look at the net profit. Their net profit actually up 10.4% to 28.7 million ringgit. Revenue up 8% to 150.6 million ringgit. Now to take it all home, the company is planning to acquire a company called Grandview Realty for 75.6 million ringgit. Public Invest has a buy call with an unchanged TP of 2.2 ringgit. TA maintained and a sell call with unchanged TP of 1 ringgit 95 cents. That's all we have today. I'm Charlotte Chong, joined by Khoo Chuang. If you need more information about the stocks that we have discussed just now, please visit www.theedgemarkets.com or pick up a physical copy of The Edge Financial Daily or weekly. Thank you for watching. Good night.